What is going on, Alpha Hunters? It is a terrific Thursday. I don't know what I was about to say, but it is a terrific Thursday. And we had a very nice gap today on the markets. Really, on the Qs, we'll take a look at that and kind of talk about where it came from, what stock kind of led that. Anyways, let's just go ahead and get going. All right. Yesterday had a nice little rally towards the end of the day, last hour or so. Nice. Ended off the session lows. So it kind of makes sense that we, probably continued a little bit higher. People trying to buy the dip yesterday. Kind of just hanging out today after the gap up. We're kind of flat from the open. Gapped up roughly 0.4%. That's kind of where we are now. And yeah, you can see it kind of just sideways, kind of choppy there in the first part of the day. Then we got the Treasury auction time. We had a nice little drop there. Continued down for about an hour and a half. And yeah, there you go. Nice little rally here the past 30 minutes off the session lows. But we've never gotten negative today. So as far as that goes, looking pretty good. Take a look at the Qs. Qs had a huge gap today. Currently, we are up about 0.9%, a little bit more than 0.9%. We gapped up around 0.8%. And you can see a little bit more of an uptrend there in the first couple hours of the day. That's not as much choppy. So obviously big tech leading the way on the day. Even this downtrend that we had middle part of the day, a little bit more of a downtrend than what the SPY kind of had. So obviously big tech is throwing its weight around. IWM gapped up kind of just like the rest of the or the other two markets we just looked at. And it's kind of just faded down all day until about the last 30 minutes. Seems like maybe we're kind of trying to change the trend here, getting back over this high that we put in about an hour and 15 minutes ago. So maybe we are bottoming there on the IWM, at least for the intraday time period. This thing has been getting hit pretty good. Yeah, has been getting hit pretty good. So we'll look at the dailies here in a second. But the DIA, choppy. Look at that. Choppy just all day. Even from about yesterday's afternoon time period, just choppy. A little bit of a gap down there on the DIA. Well, that's not good. When everything else is gapping in one direction, and you got something that goes in the other direction, that's not a good thing. So I would imagine UNH is probably getting hit a little bit today. RSP, nice gap up here on the RSP. Kind of looks like the IWM. Much stronger bullish action here over the past 45 minutes, though, on the RSP. The equal weight SP 500 is looking pretty good there. Check out the daily. Yeah, so we had that breakdown yesterday. Kind of formed that pretty good head and shoulders pattern. Kind of just sideways chopping, sideways consolidation here. Kind of in the middle of no man's land. I wouldn't want to play this bullish. I mean, I wouldn't. I mean, you're having obviously the clear breakdown yesterday. Holding doji, kind of sideways chop today. We're not bouncing back over that neckline that we broke down yesterday. So to me, it probably leads us to break down here tomorrow, early next week, Monday. Probably just continue, or not break down, but continue lower. We'll say continue lower. DIA, yeah, past couple days were kind of rough for the DIA. A little bit of a gap down today. It's only up 0.1% currently. Still under that 20 moving average EMA. But it's kind of towards the session highs. I don't know. Not really giving you anything clear. Obviously, we took out one little dip back here from January 8th. We didn't really take this December 20th low out, and that would be a big one. Obviously, then getting back below this previous all-time high level around 370, 369.50 or whatever it is. That would be a big one if we did do that. So that would be the one thing I think on the DIA that would get me a little bit more cautious on it more than anything else, is getting back below that 369 level, because you're going to get back below this December 20th low, and then you're probably going to look for other price levels then at that point in time. So once that happens, we'll look at other price levels. IWM had a nice gap up today, but it hasn't really held. So unless the IWM comes all the way back up, kind of where it gapped to, kind of ends towards the highs of the session. I mean, I would still say this is just maybe consolidating and maybe looking to get pushed lower later. That's about the only thing I can say there on the IWM. Qs, all right, so talk about the Qs here for a second on the daily time frame. So what was very important about this high that we put in around 11:30 Eastern time is when the market, or the Qs at least, took out the previous all-time high back on December 28th. So that switch that I'd kind of been talking about over the past week or so, where we had these lower highs coming in here on the Qs and the SPY. I'll just switch over to the SPY real quick. We had higher highs on the SPY. Typically that signifies a kind of a reversal type pattern on the market. That just got taken out today. Very interesting day that, we gapped up as much as we did on the Qs. And I'm going to talk about one stock here in just a second as why maybe that happened. But other than the fact that, I kind of mentioned it before, if we take out that all-time high, you can say you were bearish up here at the highs, but you're probably playing this more on the SPY, right? You're playing this on the SPY. So to me, on the SPY, if you did do that, you're probably sitting okay. You're probably still making money on it. You're probably still ahead. The only thing is now that pattern is no longer playing out. I can understand taking it off the table and saying, hey, you know what? That pattern didn't play out anymore, and just kind of cutting your wins, taking it. The other thing is I usually want to look and see when those patterns kind of break. I want to see what happens there for a short period of time after. And this is why I would say maybe leave it on. Now, if we come back up throughout the day and kind of get back up towards these highs, up around 412.5 or higher, then I would say, okay, maybe take it off. But, we just barely hit it and we came right back down. Right back down. So the rules would say to take it off, right? That's the rules. But I also have another rule, which is kind of give it the eyeball test. Like if we don't clear out of there, like if good point. If we would have cleared out over 5 minutes, just popped up over it and held for another 10 minutes, I would say, okay, yeah, I'll just cut the SPY position. But yeah, for me, it didn't really hold. It just kind of flashed up there. It took out that previous December high by 5 pennies. So yeah, I think I would leave it for right now. But if we started to climb back up to the daily highs, I think I would just take it off. Because the Qs, the weighting of the big tech in the Qs, they're gonna pull the SPY up if they just continue higher. So that's all I want to say about that. It's just kind of unfortunate. And if you looked at the line chart, maybe it's still there. Actually, it still would be there, kind of depending on how we close today. So that would be another way you can kind of look at it by closes, because we're currently just under the all-time high close, which was on December 27th. So there's kind of different ways you want to look at it. I always like looking at the intraday time frames because that is prices where people actually bought and sold. Anyways, moving on. So it's kind of up to you. It's kind of a we haven't seen the SPY and the Qs break down yet, and you also see the price action today. We gapped down to the 20 EMA today. This kind of looks like a little bit of an abandoned baby, as they say, or a little bit of opposite of an island reversal. Island reversal is when you get the gap up, you kind of hang out one day, and then you gap down, and you have an island reversal. Let me grab the old marker. So if we would have gapped up here or something like that, and we would have no overlapping of wicks or anything like that, and then you gap down, that would be an island reversal, right? So an abandoned baby is almost like what we had here over the past 3 days, where you got trading day, and you got a gap down trading day, and then you gap back up. That's an abandoned baby, and you have no overlapping. So those are all obviously pretty good reversal signals. It doesn't matter. I mean, either way, you're kind of looking at the market, but depends on if we continue higher, if we continue bullish today. The other thing I would say, there's only so much room on the Titanic, okay, and as we were looking across these five major indices, the SPY being held up by the big tech stuff. You look at the RSP, the equal weighted S&P 500. Well, this thing's breaking down and it doesn't really show like it's bouncing. All right, it's not really like didn't really have a good gap today. It's kind of just hanging out, not really doing anything crazy. IWM kind of breaking down. The only thing that's kind of looking good is the Qs and big tech. So when I kind of look at this, I'm like, is everybody just gonna pile into big tech? And once the Titanic is fully submerged, then all the rats jump off the ship, right? So I don't know. That's kind of my analogy on how I'm kind of looking and thinking about like this current marketplace, because like we went through some of the major sector ETFs yesterday, and a lot of them don't look good. A lot of them don't. Apple, talking about this one, talking about AAPL real quick, because Apple got something kind of interesting today. It's got actually an upgrade. Shocking. We talked about this yesterday on the live stream. Kind of got this double bottom kind of forming out here. You had to wait and see, if what was going to happen. Obviously, it made sense to be buying at this level, because you had a lot of previous tops kind of coming in here. Got this, obviously, this bounce that we had back first week of January. And then, obviously, we just got the follow through. We're taking out the pivot level. So, yeah, I mean, it looks, I don't know if we're going to continue up like that. I'm just trying to get rid of the arrow thing. But, honestly, I mean, it's pretty obvious, right? We got a nice little double bottom here at a previous kind of pivot level. Makes sense. Where's the 100, 200? Kind of there off the 200, upward sloping 200. Okay. We kind of bounced around the 200 before, back in November, October time frame. So yeah, Apple looking pretty good. So I'm going to quickly talk about AAPL, what's kind of going on here. Apple, as you know, this is the highest price it's traded this year, because it started out this year and got hit with downgrade after downgrade after downgrade. And then you get Bank of America coming out saying, hey, we're going to upgrade Apple stock to a buy. What? Were they neutral on Apple before? And so the sell-off, I guess, over the past 2 weeks on Apple has, well, I guess the past like 3 weeks. I mean, you can go back to the end of December on AAPL stock. But this is one that's so weird. Vision Pro and generative AI as growth catalyst? That's a fetch. That is a fetch. That's all I want to say about that. I mean, one word. That is a fetch, man. Stronger multi-year iPhone upgrade cycle. Sure. Latest for the latest hardware to enable generative AI features to be introduced in 24 and 25. So I haven't read this article. This is kind of the first time I'm kind of going through it. But this is what's so interesting about this. We have not heard anything from AI or from Apple, AAPL, about their AI plans. Like they don't talk about it in their earnings at all. Their financial analyst meetings or whatever. And Bank of America, which I get it. So you have a lot of these analysts that they do get privy to not insider information, but they get taken behind the scenes a little bit to kind of see what the company's working on, because they're investing millions to billions of dollars in these companies. They do kind of get shown a little bit of the back door behind what's behind the back door of some of these companies. But we haven't heard anything about generative AI features. And even if they have generative AI features, most of those features, Apple's been very, I'm gonna say, locked in to their own ecosystem, right? They don't really go outside their ecosystem. They don't make software outside of outside of Macs, right? So I don't really know how much I really want to believe Bank of America here. When everybody's been talking about a lot of the downgrades we've gotten over the previous couple of weeks about AAPL have been coming on. Yeah, we don't really see like the iPhone growth area anymore being like the next major catalyst. And I haven't even talked about the Vision Pro yet. I don't think this is going to be anything. And you look at this price tag, $3,500 for the Vision Pro. Who's going to buy a $3,500 computer to wear on their head? I'll wait for someone to answer that one because there's just not like it. I just don't see that as being a big deal. Now, will they introduce a Vision? Just a Vision, I guess, because typically the way Apple does products is, they release a base version of it. In this case, the Vision, and then later on they release the Pro version of it, and it's usually like a better upgrade or hardware and stuff like that. But Apple, in this case, went with the higher end version. I guess part of that kind of makes sense as, well, some of that technology is expensive, and so it's hard to justify charging as much as they would for just what would be the, base or a lesser version of the Vision Pro, the Vision or whatever. So I'm not saying I would be bearish on Apple. I would just sell any rips. This seems like a great rip to sell. It really does. I mean, this thing got shredded before the new year even started. It was getting shredded all second half of December. This thing was getting hit. And then when you get to the new year, I mean, this thing got hit so hard. Yesterday, we were kind of looking at this. We can take a look at 1 month performance. 1 month performance. This is how the S&P 500 has performed in 1 month. And this basically goes back to when almost when Apple topped out. Not quite, because we're currently on January 18th, so it would go back to like December 18th. So it roughly go back to December 18th. This is what the stocks in the S&P 500 have done over the past month. Tesla's down 16.7%. Amazon's a little bit negative. And over here in the big tech world, you got Alphabet's up 4.8%, Meta's up 8.5%, Microsoft's up 5.5%, Nvidia's up over 15%, AMD up over 16.5%, and other semiconductors are doing okay. They're doing all right. But you got AAPL here, the largest stock in the world, negative 3.8%. And this is already taking into account what it's done today. It's up 3.25% today. AAPL was down over 6% over the past month yesterday. So I don't know if this is like a, hey, we need to get an article out there so we can like dump our position kind of thing. But to go out there and put out an article on some tech about Vision Pro and that tech that has not really proven to be a major catalyst in the consumer area, and then talk about generative AI for Apple going to be the next growth story when we haven't heard anything from that company about it. How they're going to use it. Are they working on it? One of the reports that we got about AAPL last year about their generative AI is they were caught off guard on how much the market switched over to generative AI early last year. They were caught off guard. So that's all I'm going to say about that. Apple is just one that people are going to try and buy it and think that the next product they're going to release or announce is going to wind up turning into the iPhone. And they've done that with a lot of things, and they haven't. They just haven't. iPads, they sold well, but they don't make as much money. iWatches, they might sell okay, but they don't make as much money, and neither does Apple TV and some of that stuff. Now I get it, some of that's kind of like baked into the whole ecosystem, and trying to get services and all that kind of stuff. But headset wearables is a market where it is very difficult to convince consumers and people in just the business world to put on a headset. It is very difficult to do that. So, and AI, well, they're already way behind. You don't just catch up in AI. Like it doesn't just like people are exponentially progressing, and you're not just going to catch up by saying, "Hey, we're going to catch up in AI." Like it just doesn't happen. Like if you've missed it, you're falling behind, and you're probably not going to catch up. All right, moving on. That's what I think about AI. The other sectors that are doing really well. I'll just hit this real quick. Is semiconductors. Semiconductors, they ripped it 2 days ago. They crushed it kind of today. You got Qualcomm out there doing really well. Texas Instruments, Nvidia, AVGO, AMD doing pretty well, and the other big tech stuff. But outside of that, we saw the RSPs not doing well. So be careful about being the last one on that Titanic. If everybody's already grabbed a lifeboat and heading out to the next ship, like you're gonna go down. You're gonna go down with it. So VIX. VIX kind of mentioned, didn't really like how much the VIX jumped already this week yesterday. Because we didn't even pull back much, and the VIX jumped very sharply Tuesday, Wednesday. Not really dropping off as much as you would want it to drop off today. But honestly, the VIX is performing very much how you'd want it to perform for the bulls. This is how you would want it to perform for the bulls. It dropped off very sharply. The market kind of dropped off a little bit, and this rose very sharply. So people just out there got protection as soon as there was any kind of little hiccup in the marketplace. So VIX, I don't know. I don't know what it would do. Probably just hang out here for a couple days, and then maybe make a breakdown, or maybe continue higher. We'll have to see. DXY continuing higher. Had a nice little upper wick come in yesterday, but hasn't broken down. So to me, that upper wick that we had yesterday most likely will get taken out, because whenever you see those, you need to continue down basically the next day, or at least match what the previous day was, which was on January 16th. And obviously it's not. So to me, it's just kind of consolidating here, waiting for these moving averages to kind of give it support and push it higher. GLD. Nice bounce here on the GLD. Kind of mentioned this several times. Continue to be bullish on any kind of pullbacks on GLD. And there you go. 10-year yield continuing to push higher today. I believe we did have Treasury auction. It looked like we had to have a little bit of volatility around that time period. Maybe we didn't. I don't know. We definitely had something happen this morning. Did we get any major... definitely wouldn't have been building permits. Maybe there was something else not on that list. Maybe going on and affecting yields, because you can see 10-year yield up climbing again today. And this is another thing that's got to really be worrying, like the bulls, because the market's kind of it's hanging in, it's bullish, and now you've seen yields for 3 weeks in a row now kind of push up, and we've seen economic data come in that's been pretty positive, which is good. I'm glad people are having their jobs, but this is going to probably just continue to push higher because there's not a reason to cut rates. There's not a reason to cut rates. That's the biggest problem. Equities are valued as rate cuts happen in 2 months. And honestly, I don't see how they're going to do that unless we have a massively catastrophic event or start to lead into a massively catastrophic event. 10 and 2 inversion. So 10 is definitely outperforming the 2 pretty well today. Bouncing back, not quite halfway of what we did yesterday. But yeah, we kind of pulled back into that 10 EMA. So it'd be very interesting to see how we end this week if we continue to climb higher here on this inversion ratio. And that was just a very quick yesterday snapback into that 10 EMA. HYG, high yield corporate bonds. So that's interesting. So bonds are yields are up, but we're not seeing bonds drop off. So bonds are actually, or at least HYG's up a little bit. What is, let me see, 2-year yield? 2 years down a little bit. Okay. I mean, I knew the 2-year was underperforming, but it's down a little bit. Okay, so it makes sense why HRG maybe up a little bit. LQD kind of just hanging out sideways, not really doing a whole lot. TLT, so longer term yields are definitely up, so TLT is definitely down. This is gonna be the problem. Yields keep pushing higher, and is the market ever going to recognize that yields are not going to get cut? And it was kind of like, and I'm going to hit this real quick before we hit on sector rotations. It was kind of like last year when we went on this run and we kind of broke out of this 4,200 level. This is when the market realized that we weren't going to have a recession, and there was so many rate cuts baked in for the second half of the year that the market realized, okay, no recession, and then they took all the rate cuts off the board, and so it was like, okay, so we're bullish because there's no recession, but yet rates and yields continue to go higher, right? And they continue to go higher all through this pump, and then we got that 3-month pullback. So that's, I mean, it's just, are we going to have that kind of market performance again, I guess? I mean, you see that we had some pretty good consolidation back there in April, May. We're having some pretty good consolidation up here at just under the all-time high area here on the SPY for December so far for January. So maybe we'll see that happen this time. All right, let's check that sector rotation. Sector rotation. Tech, yeah, there you go. AAPL gapped up. So did a lot of semiconductors. So tech outperforming on the day. XLC outperforming. Industrials outperforming. Okay, industrials outperforming. Discretionary is underperforming. How is Tesla's down 2%? Tesla's getting housed this year. That might be a lot. Has to do maybe with yields. Yields are climbing again. Maybe Tesla kind of admitted the fact that we are very much tied to interest rates last year for auto loans. So maybe investors are definitely taking notice on yields climbing and punishing Tesla for that. All right, so discretionary is underperforming. Materials, financials, healthcare, energies, staples underperforming. Real estate and utilities also the biggest underperformers there on the day. Intraday. This is intraday. Healthcare outperforming the most. Communications, industrials, and tech also outperforming there. We got staples underperforming. Energies, financials, materials, discretionaries, utilities, and real estate all underperforming there on the day. Real estate having a bad day. Intraday. Had a little bit of a gap down there on real estate, but yeah, they've been getting hit pretty good there during the trading session as the yields have been climbing. Real estate's been getting hit. So that makes sense.